Good evening, ladies and gents. So we are back. We are live, and hopefully tonight we won't be stopped by TikTok for something ridiculous. Any case, whichever way it is, let's see how things are going. The live contains themes that some may find comfortable, and there's been restricted reason. Okay, gee, I don't know. Oopsie. Okay. So let's see. Restriction. What the heck? Views to this live. Okay. Overview. Okay. Okay. I'm not sure what that means. In any case, ladies and gents, welcome. Bottle of water. Just so that you know. Sorry about Tuesday night. I don't know if TikTok monitors my live events, that I try and give people advice and help them a bit. And I do believe that if TikTok is monitoring it and there's somebody sitting there watching to check what you're doing right or wrong, I do believe that those people are sitting in America and they did not realize that in South Africa we drive on the opposite side of the road, and we drive, we've got right-hand drive vehicles, not left-hand drive vehicles. And I think that is why my last session was cancelled on Tuesday night, because they thought I was driving and talking to you guys while I was actually being chauffeured. Well, that's all I can call it. But in any case, so tonight we do it again, and for those of you that's joining, welcome. As per usual, basically this session is, let's set the chat. You ask questions, I answer as well as I can. Anything with regards to investment, financial planning, what the cans and the cannots is, what we can help with, what we cannot help with, what advice we can give you. So please start asking questions, and let's see how many we can get through. And by the way, this will be the last session for this year. After this, I'm going to take a break for about 3 weeks. Hi, Dr. Nettie. After this, I'm going to take a break for about 3 weeks, maybe 4 weeks. And then we'll start doing it in the new year. If I'm blessed to be here, that's when I will carry on with it. So I see a number of people here, and a couple of people that I have seen from before. Not too many people on the chat at the moment. Maybe people are starting to take in the holiday scene and just wants to tune down and relax, which is kind of what I want to do as well. And although I will be playing a bit more golf over the festive season, I will still be working, so I will still be available for questions, etc., etc. So good evening, Eugene and Bastro en Pieter. Aangenaam, welkom hierso. Enige vrae, laat ons hardloop. Ek hoop die mense wat Dinsdag aand op die chat was, gaan weer aansluit by ons. There was a number of questions Tuesday night that came up, but I didn't get a chance to answer them because it was suspended. But yeah, tonight, let's see what's going to happen. What were we talking about on Tuesday night? I seem to remember there was something specific we were talking about, but I can't remember what it is now. Any case, if it comes to me, it comes to me. Hopefully, one of the people that ask questions will come onto the chat and ask a question. For those of you that are here and saying hi, welcome to you guys. Please drop a question. Anything you would like to know with regards to financial advice. If I can, I'll answer. If not, If I can answer, I will. If I can't, well, then hopefully I can get you an answer for a later date. Some content in this life is filtered to protect the community. What the heck is filtered? What can be? Man, I don't understand. But in any case, we try and keep it 100% in line with the rules. And if I do break the rules, then what can I say? But sorry, not always on there. Frikkie, goeienaand. Rion, how's it? Oh. Not sure, but I think we're about 5-7 minutes in and still haven't had a question. This is a first, folks, because normally by this time I've got 3-4 questions that's lined up. Van der Merwe, goeienaand. Dagwood, you back? How's it? Nice to see you again. Worspassie, I like the name. Daar vat hy. Yes, Mr. Van der Merwe, daar vat hy. Kom ons hardloop. Kom ons kyk wat ons vir julle kan help mee. Percy joined. How's it, Percy? Good evening. And RJ, welcome. Any tips for new advisors starting in industry? Yes. Any tips for new advisors starting in industry? Yes, absolutely. Go and speak to other financial advisors, people that you trust. Find out from them what to do, how to do, and educate yourself. Educate yourself. And one of the most important things is soft skills. It's amazing how many times financial advisors just jump in and they want to tell somebody you need 7 million rand life cover and 3 million rand disability cover and 5,000 rand a month RA without actually knowing what the client wants, without understanding the client. Only way you can understand a client is by listening to a client. So learn a few skills when it comes to actually giving people advice and talking to people. It's amazing. But yeah, and then find somebody, like I say, find a financial advisor that you feel can really give you value in terms of how they're going to train you up, that's going to co-attend meetings with you and so forth. Don't go and join a company where they put you through a product school and then a system school and then they give you a telephone and they say off you go. It's useless. You are going to leave the industry within 6 months. Patience, we are coming. Hope you have enough water. Yes, in Krugersdorp, this is actually the only water I have at the moment is the drinking water, because they are busy working on our water system. So we are actually without water from now until hopefully only Monday. It's going to be a fun time. Buy off home loan sooner or invest. 38 teacher who owns house but no savings or investments. Okay, Jen, so this is one of those things, there's always a 50-50 answer with regards to, is it better to pay off my home or is it better to invest money? And I believe that one should really seriously consider both options. So here's the simple thing, the rule of thumb that can be used. Go and have a look and see what your home loan interest rate is. Let's say your home loan, your bond rate is 10.25%. So for every rand that you put into your bond more than your normal bond repayment, you are actually saving 10.25% on interest on that rand, because now you don't have to pay that rand at a later stage, or that rand is not lying in your bond and accruing interest. So that's the first thing. On the other hand, having said that, you could invest into something that gives you a potential return of 9%. And then it sounds like the bond is the better option. But if you're going to be investing in something that's going to give you a 12% return on investment, then that 12% will be better than the 10.5% that you would be saving on the bond. So it is pretty much a 50-50. But if you go and you do the calculations, it turns out that at the end of the day, both of them are very efficient. For me, when it comes to something like that, after looking at the numbers and looking at the interest that you will be saving on your bond and the investment returns you will be getting, for me, the one thing that I believe should be a very big consideration point is the peace of mind factor. Now, what do I mean by the peace of mind factor? If you are going to sleep better at night, knowing that your bond is paid off, then it's most probably better for you to first start investing into that bond. But if you're going to be sleeping better at night, knowing that I'm sitting with an investment that's worth 2 or 3 or 500,000 rand, and I still have to pay the bond, then that is most probably the route that you have to go. Because peace of mind is incredibly important when it comes to financial advice and when it comes to people feeling comfortable with their own finances. But yeah, having said all of that, it is pretty much a 50-50, and you can ask any financial advisor to give you a calculation based on expected returns on investment versus what your interest rate is and how much time you have to pay off and what the impact will be of that extra savings that you will put in. And any advisor should be able to give you a calculation that explains this to you. So my advice would be just go and get it. I mean, banks have bond repayment calculators where they can show you how much interest you're going to save. All companies have, investment companies have quote systems that can show you what your investment will be worth at a certain growth rate. And then if you've got that, if you've got those two calculations, you can make a decision for yourself. And sometimes it's going to be very close to each other. Sometimes it's going to be further apart. But like I say, the peace of mind factor, very important according to me. Hope that helps, Jen. Okay, let's see who else. What else? Oh, here we go again. What is the average? Let me just, sorry, I just need to get back here and see if I've missed somebody. Sorry, folks, there we go. Okay, next one. Let's make this. Shano, you say, I'm 63 and not working. I have 400K. How can I invest to give me a monthly income? Shano, there's a number of ways that you can do it, but mate, I can't give you an answer on a platform like this because I need to understand you better. And when I say I need to understand you better, I need to understand you need this income for 5 years, 10 years, 15 years, the rest of your life. Can you take risk with your money and therefore invest in portfolios that's going to give you higher returns on your investment? Do you need a guarantee? You have to speak to a financial advisor to get questions like this answered because there are so many different options. Okay, so Shana, I know that's not exactly a quick and easy solution for you, but go and speak to somebody that is willing to help you and to do a proper analysis for you. Steve Knott, thank you very much. What's next? And we run up here. Gifter badges and all kinds of funny things. Sorry, folks. Tyrone Kencross, mate, what are you doing? You have joined like 110 times or something. I'm not sure. But thank you very much. Marius Pretorius, what is the average FI fee on investments at a reputable entity like Alexander Forbes Coronation? So Marius, on normal investments, okay, and when I'm saying normal investments, I'm talking unit trust investments and life investments, which is also known as endowments. Law allows for anything between 0% and 3.5% upfront. That law allows for anything between 0% and 1% as an ongoing fee or ongoing advice fee for ongoing advice. But I have found in the market that very few advisors works on those maximums anymore. So I would say the average fee these days ranges between 1 to 2% upfront, and then it also ranges between 0.25 and 0.75% as an ongoing. Personally, when I do investments, my fee is 1% upfront and 0.5% ongoing. I hope that answers it for you. Oh yeah, by the way, that is, like I say, on unit trust and life investments. If you are talking retirement annuities, life annuities, it changes a bit because it's compulsory money and because of legislation. On some of those products, the maximum that can be taken is only 1.7%. So it depends from product to product what it will be. But the average, I would say, personally, like I say, I do a 1% upfront, 0.5% ongoing. Let's see who else. Tyrone K-Cross. I wonder what this means, Tyrone. You've been on like 40 times, China. I see your name about 40 times. What it means, I'm not 100% sure. Tyrone. And then I get back to Marius's question and I kind of lose the plot here. Oh, what are the most used unit trust funds and fund managers? Yes, see, Marius, that's actually a bit of a difficult question. Because, and the reason why, the reason is because if you go and look at fund managers like Alan Gray, 91, which used to be called Investec, Coronation, and Old Mutual, those 4 companies. They are most probably the 4 companies with the biggest assets under management, meaning that they've got the most capital invested with them, that clients have invested with them, and that they trust, or that clients trust them to manage on their behalf. So if you look purely from a volumes-based point, then it's those: Old Mutual, Alan Gray, 91, and Coronation. I think it was Coronation. In any case, which is most used? I would say that has changed. Although those companies has the most assets under management, they are most probably not the companies that is issuing the most new business, so to speak. So new clients coming to them and investing with them. Because there's a lot of other companies that's come into the markets that sound sexy, sound fantastic, and that is getting a lot of attraction in the market. And which of those companies is, I can't tell you. I can't give you the names because I will have to go and check the statistics. But yeah, I think there's a lot of companies out there that is getting more new business than these other 4 companies. But purely from an assets under management point of view, it will be those 4. And yeah, the trust factor once again. I see a lot of people ask me about 10x. Should I be investing with 10x? I've looked at their portfolios and they do well. I don't think it's exceptional, but I think they are doing well. But personally, I don't know if I would trust 10x to invest my money with them, because they haven't been around so long. I would rather go to an investor like an Alan Gray or an Old Mutual or a Sanlam, because they've just been around so much longer. They've got such a long track record that makes me trust them, that they're here for the long run. With the other companies, I'm not sure if they're in the market a bit on the short side. Do I trust them? Can they be trusted? Maybe I should just wait 2 or 3 or 4 years and see how they're doing, if they're still around. So yeah, I suppose it's once again everybody to his own in terms of how much you trust, or how much you trust the company, and how willing you are to go and invest your money with them. Jen, thank you for your awesome advice. Appreciate it. Hope you have a lekker holiday. Enjoy your golf. Thank you very much, Jen. I am going to do that. Do you have a favorite unit trust fund? I've got various favorites, to be honest with you. And the reason why I say I've got various favorites, so just to give a bit of perspective with regards to this question. In South Africa, at this stage, as I'm sitting here, we've got more than 2,000 unit trusts. Now, just let that sink in for a second. 2,000 unit trusts. It is impossible to know and understand all these unit trusts, to know how much they are growing, how good they are, how good their fund managers is. Just absolutely impossible. And trust me, just about every investment company, once they get to know about you, they get your name and they get your number, they're on your case, and they want you to start selling their products and sell their portfolios, and they come and give you a presentation and they tell you why their strategy is the best and why their portfolio manager is the best, and they've all got good stories. But with more than 2,000 unit trusts funds available, it's impossible to understand and know everything. You can have a reasonable idea of everything, but that's it. So what I like to do, and what I have done, and what I've done over the last 30 years that I've been in the industry, is as I've gone on, I have found a number of unit trusts in specific sectors. So when I say specific sector, low risk. If I want to do an investment for somebody that wants a low risk return on the investment, then I normally would go for something like the Marriott Income Fund. I really think that that's a good fund. I would go for something like Coronation Stable Fund, because that's pretty good. Then I've got a few funds that I like when it comes to medium risk funds, like Allan Gray Balance Fund. I think is a great fund. Investec or 91 Balance Fund, good fund. Marriott has another one. What's it called? Oh, now I've forgotten the name. Also, Old Mutual Balance Fund, exceptionally good fund, I believe, my personal opinion. And then there's a few high risk funds. So if you are in a risk category where you can take a bit more risk, and by taking a bit more risk, it just means that you can go into a fund where there's a lot more shares. Okay, then I like Allan Gray Equity Fund. I like Old Mutual Global Equity Fund. I like the Old Mutual MSCE feeder fund. Coronation Equity Fund. And then 91 again, Investec's Equity Fund. So I've picked in every risk category a few unit trusts that I enjoy. And that's what I normally offer to clients, because at the end of the day, a client should be investing based on their strategy. Is my strategy low, medium, or high risk? Pick a strategy, pick a fund in line with your strategy, and off you go. It should not be based on which fund is going to do the best. Thank you. Do you have, okay. When I reinvest my money that I receive from SARS, I borrow back bobbers when I reinvest my money that I receive from SARS, from my RA, do a company like Discovery much that amount? No, never. No. Your money that you get back from SARS based on the retirement annuity contributions that you've done, okay? Whether it's 2,000 Rand or 20,000 Rand or whatever the case might be, that money is your money, okay? Because SARS said to you, you don't have to pay this amount of tax, so we're giving it to you. You can do with it as you wish. Now, if you then go and invest it, doesn't matter whether it's Discovery or any other investment company, and it doesn't matter whether it's a retirement annuity or any other type of investment, the money that goes in, that's your money. And nobody is going to match it. Because, mate, if they were matching it, they would be bankrupt. Can you imagine 1,000 people investing R1 million each in a year and then expecting the insurer to match it? So no, it's never matched. But what companies do these days, Discovery included, Old Mutual, Momentum, Sanlam, all of those companies, they all have some form of incentive, be that through their rewards programs, whatever, whereby they say, okay, if you invest your money and you leave it for 5 years, whatever growth you get, we will enhance that growth by 5%, or we will enhance that, we give you an extra 10% off the growth, whatever the case might be. So the companies these days give you like bonuses on your investment to encourage people to invest more with them and to leave their money in their investments longer. Because the more money an investment company can invest, the more chance they have of growing the capital and therefore having money that they can go and use again in the market for other investments. So, Mr. Borrowback, no, Discovery does not match that amount. Nice view you got there, Madala. Thank you very much, Mr. Fine Champagne. Yes, I'm actually sitting outside tonight on my deck. It is extremely warm here, and I just needed to get out of the house and catch a bit of a breeze. So yes, I'm sitting outside on my deck, and it is a nice view. This house that I have, I bought many years ago, 22 years ago. It was a small little 2-bedroom house. I had to renovate it to fix it up and everything like that. It was the smallest house in the neighborhood, but luckily I had a view, and that's why I bought it. And today, I'm very happy with it. Thank you very much. Okay, let's see what's news. Corey, I love the way you simplify explanation. It is so easy to understand. Thanks. Royston, thank you very much, mate. I hope the gentleman or lady that was on earlier and asked about young financial advisors listened to this. I really honestly believe that one of the biggest problems in our industry is that people confuse advice with terminology. So I've listened to so many advisors that talk all these big words, hedge funds and compound growth and this and that, or whatever the case might be, and all you're doing is you're confusing a client, because that client doesn't understand the language that we speak in this industry. So I believe that if you want to become a good financial advisor, and especially if there's young advisors out there, you're going to learn a hell of a lot of different terminology, very smart words, or what things sounds like very smart words that actually means rubbish. But if you take that and you can simplify it for clients, and you can break it down into a language the client understands, you will be a lot more successful, because people don't buy your lots of talks, your technicalities, your big words. They buy and understand. They buy what they can understand. Doesn't help to tell a client that because of his loss ratio and his this and his that, he has to do X, Y, and Z, and the client has absolutely no clue about what's going on. So I'm glad, Royston, if you like that I'm simplifying explanations, it means that I am getting, I am actually managing to do what I've always liked to do. Ek like oom baie, ons moet gaan vis vang. Synthetic markets. Wat se vis wil jy gaan vang, mater? As jy wil gaan vis vang, yes, die job, ek het dit lanklaas gedoen, maar ek sal dit gaan doen. Ek weet net nie meer of ek lus is vir daar so heel naweek in die son sit nie. Thank you. When I invest a lump sum into my RA, does that qualify for tax return from SARS? Yes, absolutely. So you see, this is what happens. Just a quick explanation here for you, Borrell. If you invest, let's say 100,000 Rand into a retirement annuity, and at the end of the year, you get a tax return of say 30,000 Rand because you're on a 30% tax rate. Just plain simple figures. In your investment, you still have 100,000 Rand, okay? The 30,000 that SARS is giving back to you is the tax that they say, we're not going to charge you this tax, and therefore we're giving you this 30,000 Rand back. You can do with that 30,000 what you want. So if you take that 30,000, you go put it into that same retirement annuity. Then next year, with the next tax return, then SARS says, okay, that 30,000 Rand, you've not contributed anything, but you've got a 30% tax rebate that we owe you. Then they take 30% of 30,000 Rand, which is 9,300 something odd Rand, or 10,000 Rand, and they give that back to you again. And so it carries on. You can basically take that same amount of money, because every time it's a tax saving that they're giving you. And it's the tax saving that you're actually reinvesting into your retirement annuity. So yes, you can do it. It's your money. You can do with it what you want, mate. What was the next one? I'm sure I skipped somebody here. Maybe I didn't. Maybe I didn't. Tyron Kencross. Sivawe. Okay. Oh, okay. Whatever that means. I'm trying to figure this out. Somebody's got a badge, another badge. Okay, Lizzie. So when you're 55 and have a provident fund, you can still take all funds under the vested rights portion. Lizzie? Yes, you can, but why would you want to do that? Lizzie, don't do it. So, number one, Lizzie, doesn't matter whether the money is in the pension or provident fund. When you get to the age of 55, you have to actually retire from the fund. Remember that. So that means you have to give up your job in order to get access to your provident or pension fund. Okay. So on your pension fund, 1/3 you can take in cash, 2/3 you must take as income. On the provident fund, you can take all the capital. But you can only take all the capital in the vested fund as of the year 2021 February. Everything that went into your provident fund after that, you must take the same as with the pension fund. 1/3 in cash, 2/3 as a monthly income. So then the next thing comes in. If from 2021 until now, the money that you've invested from then till now is less than a certain amount of money. So let's call it, it is 247,000 Rand. If less than that, then you can actually withdraw all that money. Okay, so on your provident fund, you can most probably withdraw all your funds at the age of 55. But remember, like I say, you're going to have to leave your job or you're going to have to resign before the age of 55 in order to get that money. So what happens now? Because you are taking all your money, instead of you getting 1/3 cash, mostly tax-free, you're going to end up paying tax from 27,500 Rand. 27,500 Rand. So suddenly, Lizzie, where you would have had 550,000 Rand tax-free, you will now only have 27,500 tax-free, and on the rest you will pay tax. Don't do it. Don't do it. Honestly, folks, my parents are absolute proof of how people suffer because they took too much money when they went into retirement and they wasted it. I mean, at the age of 55, we get to the point that we don't want to battle anymore. We want to cruise through life. Now, if you're going to take your provident fund money, I promise you, the chances that you're going to make it work is 1 out of 10. Because if you've never run your own company or whatever the case might be, you're not going to be able to do it now. If you're going to have a house, you're going to have to pay maintenance. If you're going to have all of that stuff, you're not going to have money to eat, and you're going to suffer. So Lizzie, I know maybe I'm being unfair here with regards to the question, but I have just in so many cases seen that once somebody asks this question, it normally means that they intend on doing it. And I wish I could get every South African not to do it, because you are going to hurt yourself. It is so sad when people do it. Any case, Lizzie, so yes, you can, but don't do it. Please don't do it. Jen, are you a Dave Ramsey fan? Yes, I'm a big Dave Ramsey fan. Do you agree with his 7 baby steps? Absolutely. Which books do you recommend to read? Dave Ramsey, his baby steps, absolutely, cannot go wrong with that. He's actually done another book as well. Shiv it. Hold on a second, I'm going to scream quickly. My lief, wil jy nie gou vir my net daai boek bring wat op my speel op my bedside table lê nie asseblief? Sorry about that. I have to call my assistant to come and help me. Thank you very much. Thank you. Okay, so you go read Dave Ramsey's book, okay? And then this book, The Philosophy of Money by Morgan Housel. The Philosophy of Money by Morgan Housel. Go and read this book. If you've read this book, and you understand it, and you follow the, what do you call it? You follow the steps that they give. That's what I said. The psychology of money. I'm sure that's what I said. Any case. If you follow what this guy says in this book and you buy into it and you do it, you will never again in your life have a problem with investing. You will never be not wealthy. You will be wealthy. That together with Dave Ramsey, those are the only two you have to read. That's it. Stop, start, over and done with. But then if you want to go and improve your life and you want to become better with money, become better in yourself as a person, spirituality, mentally, everything, then I've got a ton of books I could give to you. Homeless to Billionaire, Be Obsessed or Be Averaged, Never Fear. There's a number of books. Oh man, I can talk about this never ending. So yes, there's plenty of books. Jen, and I hope that answers you. But go and start with those two. It's not Dave Ramsey's. You know what, folks? The problem is I can't check on my phone while I'm talking to you. That's a problem. Because if I could check on my book, I could give you the other book from Dave Ramsey that I believe is just as good as his Baby Steps. But that one, The Psychology of Money, you won't go wrong. Lizzie, it's my pleasure. I hope that helps. Just finished that book yesterday, planning on reading it again. Great stuff. Are you talking about The Psychology of Money? Borrow back? Then well done, sir. Fantastic. As a matter of fact, I'm halfway through putting together an investment training course that I wish to offer on my website, free, gratis, and for nothing. And the majority of what I say in that investment training is based on what comes out of those two books. And then a little bit out of my years of experience. What's next? Yeah. Fluffy.com. Good evening to you as well, and a wonderful evening to you as well. Fluffy, what must we please do? Please do what? We can't do anything, Fluffy. We're just having a chat here about the investments and stuff like that. So let's see what's next. Oh, gee, what a compliment, Jen. Thank you. Yes, see that is a humongous compliment. Thank you very much. You think, I take it. Thank you very much. Share your thoughts and suggestions. Fluffy, what do you want us to share our thoughts and suggestions on? Fluffy, I think you're in the wrong live. Maybe on asset, I'm not sure. But yeah, not 100% sure what you're on about yet. We're talking about investments and stuff like that, and I honestly don't know, Fluffy, what you're on about. Royston's joined. Sorry, folks. I don't know if you all can see the comments as I read them and as I give feedback. But yeah, I don't know what Fluffy is on about. Yeah, I think she's she's thinking she's talking to somebody else, but she's talking to me. So I don't see any new question. I see a couple of people joining us. So please, if there's anything else, what more can I tell you? Investments. I think one other thing with regards to investments, and this is something that people don't understand. Most probably one of the most beneficial things you can know and understand about investing is that not having debt is one of the best investments you can ever have in your life. Because just by not having debt, you don't have to go and pay interest for something that you can't use. Example, credit card. I've got a 10,000 Rand credit card and I use it to the brim, and then I have to pay it off over 12 months. So I am paying that 10,000 Rand investment off, that 10,000 Rand credit card off at 24% tax interest. That means 2,400 Rand interest. So that means whatever I've bought with that 10,000 Rand that was in that credit card, let's call it a television set that I couldn't afford, but then I had a credit card and I could. The extra 2,400 Rand, you've paid for nothing. Absolutely, there's nothing you can show for it. Because the price on the television was 10,000 Rand. But you had to pay 2,400 Rand to the bank in interest. And you can show nothing for it. You've just wasted the money. So if you do not have that debt and you can save for 6 months and buy your 10,000 Rand television set, you've saved yourself 2,400 Rand in interest. And if you want to think about it like this, if you would have had it on a credit card, and you take that 2,400 rand that you now that you would have paid interest, and you save that up and you put that into an investment, and you leave it for the next 20 years. In 20 years, you're going to be smiling this wide because the 2,400 rand interest that you would have paid and had nothing to show for would now show you a lack of fat investment. Okay, so that was just a little bit of a quick rant here with regards to investments. Best investment is to save money. Yes, Jock, it is. And you know what, Jock? If I can get everybody in South Africa to just start saving 10% of the income, I don't care how much the income is, just 10% of the income, we will not have a problem in South Africa in terms of retirement. We will not have people sitting in SASSA queues. We will not have old people retiring with too little money to live on. So the only thing with regards to best thing is to invest money, cannot agree more. But the best way to save or the best way to invest is to go and plan. Because I can show you investments that are showing 22 and 23 and 24% return on investment. But they're not tax effective investments. So it doesn't help to get a big return on your investment, but then you have to lose 40% of your growth because of taxes. So this is where investment really starts being fun. It's when you go and you plan somebody's portfolio and you put together retirement annuities, unit trusts, life investments, alternative investments, whatever it can, and you go and put it together into such a little package that they get the best of both worlds. They get all the best tax benefits and they get the best possible return that they can get. And that's when it really becomes fun, because I can promise you, you go and look at somebody's portfolio that was structured correctly versus somebody that just saved money in whatever, unit trust, money market and bank, whatever the case might be. And you compare those two investments 20 years down the line. The guy whose stuff has been structured properly versus the guy that just invested his money. This guy who had a properly structured portfolio is going to be 40% better off than the other guy. Absolutely, no two ways about it. I've been following you for a while and your knowledge is valuable. Thank you, Fluffy. I really do appreciate it. And I'm sorry if I joked with you, but I really didn't understand your comments, Fluffy. So thank you very much. And I appreciate the fact that you believe my knowledge is valuable. But I still don't understand your comments from earlier saying that I should share my thoughts, because that's what I'm doing. Jock Burger, best investment is to save money. Yes, Jock, I think I just talked about that. Mario sê, skuld maak die Griek ryk. So is my pa sou sê. Dis correct. Absoluut. Skuld maak die Griek ryk. Of die Portugees, of wie ook al. Daai ou wat vir jou geld leen, hy is die ou wat smaal. Save and save, yes, absolute. I want to invest 2 million that I have in my savings account. Where should I invest it? So Peter, here's the thing. I would love to tell you on this platform, take your money and go invest it in company A, B, and C and products X, Y, and Z. But I cannot give advice to that based on a question like this, because your circumstances and my circumstances differ from each other. So if I was talking to somebody that says, I've got 2 million rand in the bank, where must I go invest it? And after talking to this person, I realized that they are conservative, they don't like debt, they don't want to be invested in banks, and they want to ensure that the money is always protected. I have to guide that person into a life investment, okay, and in a very conservative portfolio. But then I speak to Peter and I say, Peter, and you? And he says, I've got 2 million rand, I want to invest it, I've got 30 years left. I don't mind if I lose 500,000 rand at some point in this investment term that I'm going to have, as long as at the end of the day, when I get there, I've had the maximum return. I want to try and get at least 12 to 15% return on investment. Then I have to go and invest your money into a different investment. It might not even be a life investment. It might be an alternative investment which is not offered by your normal stock standard investment companies. So do you understand why I say I can't give advice with regards to something like this? This is where the consultation becomes so important, because once I have a consultation with you, I can sit down, find out how old you are, how many beneficiaries do you have that's financially dependent on you, what your assets are like, what your liabilities are like, how long do you want to invest for, what is the money going to be used for when it comes to the day that you want to take it, what is your tax situation, what will be the best tax indication for this, how much risk can you take, what do you want to happen to the money in the event that you pass away. All these things I have to take into consideration before I can go and work out and say to you, okay, Peter, your 2 million rand, I think we have to go and put into this investment, or I think we have to put it into 3 different investments, whatever. So Peter, my mate, in my WhatsApp, in my profile is my WhatsApp number. Send me a message there, or go to my website. There's my email address. Contact me. Ask me the same question, and I'll answer you in a bit more comprehensive way if I have a bit more information. But I would suggest that we actually book a consultation. You can come and talk to me, or you can talk to one of my advisors, and we will then help you with a planning session. And here's the nice thing, Peter. If you don't like what you hear from the planning session, you go and find a second financial advisor, and a third, and a fourth, until you get to somebody that you feel this person is doing exactly what I want. I trust them. I can invest my money with them. Okay, Peter, hope that answers it, mate. I used to save in my bond over and above additional bond payments. Only draw what I save for. That's an absolute option, Marius. Can't fault you on that. So, kudos to you, mate. What is the tax benefits of a life investment? So, Mr. Borrowback, the tax benefits is as follows. Whatever your tax rate is, okay, let's say that you are on a 41% tax rate, just for the heck of it. So if you invest your money into unit trust, and your money grows from 1 million to 2 million, that million rand that you've earned in growth is a capital gain. So because it's in unit trust, on that million rand, you will pay capital gains tax, which is basically calculated on your 41% personal tax rates. On the life investment side of things, the same applies. There's still capital gains that's being taken, but in the portfolio, in your investment, you choose a portfolio that you invest in money. The portfolio manager that decides where to buy and sell shares for you, put money into stocks, bonds, whatever the case might be, that portfolio manager, he becomes responsible for the capital gains tax that's payable, and he sorts it out to SARS. And he sorts it out at a 30% tax rate, so company tax rate. So effectively, between the unit trust and the life investment, if you're on a 41% tax rate, you're saving 11% in taxes. Okay, so that's the tax benefit. So where the life investment really becomes nice is because you have to really invest for a long period of time before you see the differences in returns and taxes and whatever on the different investments. But what's very nice about life investment, and this I see over and over and over, people that has unit trust, once they withdraw the money and they have to pay that capital gains, then they like immediately pissed off, tax, and I'm losing out on my investment. The person that's invested in the life investment, because the tax has already been taken care of in the investment, when they start withdrawing money, whether it's a monthly income or lump sums or whatever, it's after tax money, so there's never tax involved again. And those people are always as happy as pigs in shit, pardon the French, because they can just withdraw their money and they don't have to worry about the tax man anymore. So those are the two tax benefits. The one is the lower tax rate, and you're being taxed within the fund, so you don't feel it in your pocket when you make the withdrawal. And the second thing is that the after-tax effect that it has at the end of the day. at the end of the investment term. That's funny. How do we start the education process with minors needing to understand generalization wealth? So Fluffy, I really believe that we should start in the house. That's the first place. Unfortunately, in the house, most parents don't have good financial discipline and knowledge. So in the house, parents should start educating themselves. They should take a little bit of time to learn how to budget, to learn a little bit about growth and compound growth, investing, etc., etc. Then they should be talking to their kids, and they should be guiding the kids. I mean, if you are a parent and you are going to discipline your kids, then surely you can train your kids. Same thing. The second thing is, I do believe that our educational system is flawed. Not only in South Africa, I think across the world, the educational system is flawed because you are not being taught things like budgeting, working with money, etc., etc. Yes, kids go to school and they've got economics, business economics, accountancy. Is that what they call it? Rekeningkunde, they used to call it. And it is subjects that's aimed at what you do in business one day when you have a business. But it doesn't teach the basics. So I believe one of the big things, and that's one of the things I and a group of people are talking about at the moment, we want to put together an actual program where we go and speak to schools and to the children in the schools, and that we talk to them a little bit, 45 minutes, half an hour to 45 minutes, about understanding how money works, how budgeting works, how to grow your money, etc., and then to create a program whereby we tell all the kids that has listened to this, listen here, we will give you online coaching, free, gratis, and for nothing. And then by the time you walk out of matric one day, then at least you've got a better understanding of money and money matters. So that's where I think we should start with the education progress, is we should start with parents. And if parents can't teach their kids, then parents should take the responsibility to take the kids to somebody that's willing to help. And then secondly, since our education system doesn't seem as if it's ever going to change, well, then somebody like myself and the people I'm talking to, we will have to do stuff like that. And I hope to announce in a few months' time that we've got that off the ground. Discovery, vitality, whoopsie. It was, oh, there we go. Discovery, vitality, savings account, 8%. Okay. 8%. Jock, not fantastic, not great. I suppose this is the bank savings account. If it's the bank savings account, remember tax must still come off. If it's not the bank savings account and it's a straightforward 8%, you're beating inflation by 2%. Not really great shakes. Think you can do much better than that. But in any case, thank you, pleasure, Jock. RA in Easy Equities, a good move or not? Identical series, interesting name. RA in Easy Equities, a good move or not? Here's the thing. Easy Equities, okay? Easy Equities is a platform where you can go and buy and sell shares. That's what it is. It's a platform where you can buy and sell shares. They have now created products like RAs where you can buy and sell shares in a retirement annuity. They have to follow the guidelines, obviously. There has to be Regulation 28 compliant. So they will tell you if you want to buy 10 different shares and it's more than Regulation 28, you can't do it and you have to rebalance. But at the end of the day, Easy Equities is share buying and selling. And you as an individual have to do it. So here's the answer with regards to is it a good move or not. Do you know how to buy and sell shares? Do you know how to pick shares? That's what you should be asking yourself. Because moving to Easy Equities, you're not going to save yourself a hell of a lot of money and cost. I can promise you that. You might think you're going to do it, but you're not. So by trying to eliminate the financial advisor by using something like Easy Equities, you're not saving yourself a ton load of money, number one. And number two is you have to take the responsibility of picking your own shares, picking and selling your own shares. So this is my thing. If I am not a car salesman and I want to buy a car, should I walk into the first dealership and start telling the salesman which car I want and why I want it? No, because I don't understand cars. I need to find a salesman and let them convince me that I am going to buy the best possible car from them. Easy equities. It's like you walking into a dealership and without any training, whatever, telling them what car you want to buy. Instead of getting a dealership agent to talk to you and to advise you on the best car. So I'm not going to tell you it's right or it's not right. I know there's always the exception to the rule where people go into something like this and they hit the right targets and they hit the right shares and they make lots of money. Well, kudos to them. A blind chicken can also every now and again pick up a piece of food. Identical series long term. Yes, thank you. Peter Walton, thanks. It's a pleasure. Good night. I'm off to a meeting. Royston, I think I'm almost off. If I'm not mistaken, we are just about at 7 o'clock. I think we've got 5 more minutes. It's a pleasure, Jock, and Identical Series. And who else was there? Send on me, fully agree. Thank you. What do you think about Cogent's funds managed by BlackRock? Though, honestly, I don't know. I will have to go and check up on this. I know about BlackRock, but I don't know about the Cogent's funds. Once again, like I said earlier, and maybe you weren't here, I said there's more than 2,000 unit trusts alone in South Africa. Shares on the Joburg Stock Exchange, there's almost 400 different shares you can buy there. And that's just in South Africa. Imagine the rest of the world. So BlackRock is American, and there's even more unit trust than shares there. So yeah, this is one of those that I have not run into, but I will take note. I will take this name and I will go and read up a bit about it, and then I'll give you my opinion. For now, can't give you opinion. Don't know them. Sorry though. Identical Series says it makes a lot of sense. Thanks. It's a pleasure, Identical Series. Yeah, mate, do yourself a favor and I'll tell you this, and I've told it to a lot of people. Go and find a financial advisor. Be willing, your wealth, after your monthly income that you earn, which is your biggest asset. Your monthly income that you earn is your biggest asset. After that, the next biggest asset that you have is the money that you invest for some time in the future. So it's important. You should be willing to take time with it. You should be willing to invest time in your financial management and not just, let's put 500 Rand or 1,000 Rand or whatever. So do yourself a favor and go and see a financial advisor. And if you do not like what you hear, or you do not agree, or the two of you just don't click, or whatever the case might be, go and see a second and a third and a fourth. You will find a financial advisor that you trust and it gives you proper advice. And then stick with that person. Walk a road with him. You will never look back. You will never be disappointed that you did it. Fluffy says, thank you for your knowledge. I will certainly contact you near. Absolutely, Fluffy. Great, as a pleasure. I look forward to hearing from you. Have a festival season to all. Thank you, Fluffy, and to you as well. May 2025 bring you joy and happiness. Thank you very, very much, Fluffy. So, ladies and gents, I think we are at that time of the night. It is 7 o'clock. Thank you for these last sessions. I'm working overseas. Oh, Jen, fantastic. Where are you from? Let us know, please. Where are you working from? Anyways, it's that time. It is 7 o'clock. I'm going to love you and leave you until the new year. I promise I will be back second or third week of January. I will start the last sessions again. In the meantime, you want to ask me anything, you know where to find my WhatsApp number, my profile, by all means. I'm going to be here all December. I might play a bit more golf, but I'm going to be busy all the time. So looking forward to seeing all of you. May you have a wonderful festive season. God bless. And please be safe if you are on the roads. Okay. Really enjoyed having this time with you guys this year. And see you all next year. All the best. Bye bye.